So, what if you could turn all the chaos and noise of the stock market into your single greatest advantage? Well, that's exactly the core promise of one of the most important investing books ever written, Benjamin Graham's The Intelligent Investor. Today, we're going to break down his timeless wisdom and show you exactly how to do it.
Everything really starts with this one simple question. And believe me, it's not just some random thought experiment. It's actually this powerful little story that Benjamin Graham came up with to completely reframe how we should be thinking about investing.
All right, so Graham wants you to imagine that you're in business with a partner. We'll call him Mr. Market. And every single day, without fail, he shows up ready to make a deal. He'll offer to buy your shares from you or sell you his. But there's a pretty big catch. Your partner is, well, he's incredibly moody. On some days, Mr. Market is just euphoric. He's totally optimistic, sees nothing but blue skies ahead, and he'll offer to buy your shares for ridiculously high prices. But then, on other days, he's just deeply pessimistic. He's convinced the world is ending, and he'll practically beg you to take his shares off his hands for pennies on the dollar. He just swings wildly between these two extremes, and that right there, that's where the opportunity is. So you have a choice here. You can totally let Mr. Market's crazy moods dictate your own, right? Getting scared when he's pessimistic and greedy when he's euphoric. Or you can learn to use his emotional swings to your advantage. The whole goal is to profit from his silliness, not become a part of it. Okay, so how do you actually do that? How do you avoid getting swept up in his mania or his depression? How do you become the smart, stable partner in this whole relationship? Well, it all starts by adopting what Graham calls the intelligent investor mindset. And listen, when Graham says intelligent, he is not talking about your IQ score, not at all. He's talking about someone who is patient, who is disciplined, and most importantly, someone who can control their emotions. It's really about having the strength to think for yourself instead of just blindly following the herd. And Graham said it best himself. This kind of intelligence is, and I quote, a trait more of the character than of the brain. It's the discipline to just ignore Mr. Market when he's offering you crazy high prices. And it's the courage to take him up on his offer when he's panicking and selling everything on the cheap. Now, to build that kind of discipline, you're going to need some tools. And the single most important tool in the Intelligent Investor's Toolkit is this concept that Graham called the margin of safety. Okay, first things first, we've got to separate two key ideas that people mix up all the time. The first one is price. This is simply what Mr. Market is offering you today. It's the number you see on the screen, and it's totally driven by whatever mood he's in. The second idea is value. Now, this is totally different. This is the underlying real-world worth of the business itself, based on its assets, its earnings, its future prospects. This is what you actually get for your money. And the intelligent investor knows that price and value are almost never the same thing. So the margin of safety is just the gap between that low price Mr. Market is offering you and the high value you're actually getting. It's your buffer. It's your cushion against bad luck, against your own mistakes, and against Mr. Market's totally unpredictable moods. Really, you should think of it as your financial shock absorber. This focus on value and safety, well, it leads us to a really crucial distinction that, frankly, most people miss: the huge difference between true investing and simple speculation. Graham's definition here is crystal clear. An investment operation is one that, after thorough analysis, promises the safety of your money and a reasonable return. Anything, and I mean anything, that doesn't meet that standard is pure speculation. It's basically the difference between doing your homework and just gambling. Now, Graham wasn't a total purist. He knew that speculating could be tempting. So his advice was this: if you absolutely must speculate, keep it completely separate from your real investments and limit it to no more than 10% of your investment funds. Think of it like a small mad money account, and that's it. So that all naturally leads to the next question, right? If we're supposed to avoid speculation and really focus on investing, what should a solid defensive portfolio actually look like? Graham's advice here was famously simple and really robust. He basically said to maintain a balance. He advocated for a portfolio that's roughly 50% in stocks and 50% in high-quality bonds or cash. This simple structure gives you a built-in stabilizer. It protects you from the worst of Mr. Market's downturns while still letting you participate in the growth. So we've covered Mr. Market, the right mindset, a sound portfolio, but what's the ultimate secret weapon that ties all of this together? Well, the answer is probably a lot simpler than you think. It all really just comes down to this. A stock is a piece of a real business, not some lottery ticket. Mr. Market will always be emotional. That's a given. But the price you pay today is what determines your profit tomorrow. And ultimately, your success doesn't depend on outsmarting the market. It depends on controlling yourself. And hey, if you have any doubt about just how powerful these ideas are, just look at this endorsement. Warren Buffett, arguably the most successful investor in history, was actually Graham's student, and he calls this book the foundation of his entire career. Its wisdom is absolutely timeless. So if you remember just one thing from all of this, let it be this. After all the analysis, all the strategy, what matters most is you. You cannot control Mr. Market. You can only control your reaction to him. Your behavior is infinitely more important than the market's. So, at the end of the day, it all comes down to this one final question. Who is going to control your financial future? Is it going to be your emotional, unpredictable partner, Mr. Market? Or is it going to be you? Thanks to Graham's wisdom, that choice is entirely yours.